Hey everyone, welcome back to El Dorado FX. Today we're going to dive into something that shakes up the financial world every time it happens, when Fed Chair Jerome Powell speaks. Whether you're into investing, trading, or just curious about how global markets work, understanding Powell's influence on the US dollar and gold prices is crucial. So grab a seat and let's break it all down. Before we get into the nitty-gritty, let's first talk about who Jerome Powell is and why his words carry so much weight. Jerome Powell is the current chair of the U.S. Federal Reserve, the central bank responsible for the monetary policy of the world's largest economy. Appointed in 2018, Powell's job is to steer the U.S. economy by setting interest rates, controlling inflation, and ensuring employment levels remain healthy. When Powell speaks, whether it's during a press conference, a scheduled speech, or even in testimony before Congress, financial markets across the globe tune in. Why? Because his insights and signals about future economic policies can move markets, particularly the US dollar and gold prices. Let's start with the US dollar. The dollar is the world's primary reserve currency, and its value is closely tied to what the Federal Reserve decides to do with interest rates and monetary policy. Whenever Powell speaks, traders and investors listen carefully for clues on the Fed's next moves. If Powell hints at raising interest rates to combat inflation, the dollar usually strengthens. Higher interest rates make U.S. assets more attractive to foreign investors, who need to buy dollars to invest in the U.S. This increased demand for the dollar drives its value up. On the flip side, if Powell suggests that the Fed might lower interest rates or keep them low to support economic growth, the dollar can weaken. Lower rates make U.S. assets less attractive, reducing the demand for the dollar and pushing its value down. Powell's tone, whether hawkish, favoring rate hikes, or dovish, favoring rate cuts, can therefore have a direct and immediate impact on the strength of the dollar. Now, let's talk about gold. Often considered the go-to safe haven asset in times of economic uncertainty, gold doesn't yield any interest, so its price is heavily influenced by the factors that Powell discusses, especially interest rates and inflation. If Powell indicates that inflation is on the rise and the Fed may need to tighten monetary policy, gold prices might increase. Why? Because gold is seen as a hedge against inflation. When the value of paper currency declines due to inflation, people turn to gold to preserve their wealth. However, if Powell signals higher interest rates to combat that inflation, gold might face some downward pressure. Higher interest rates increase the opportunity cost of holding gold, since you could earn more from interest-bearing assets like bonds instead of holding non-yielding gold. On the other hand, if Powell's tone is dovish, indicating lower or stable interest rates, gold prices may rise. This is because the opportunity cost of holding gold remains low and it continues to be an attractive option for investors. So, how do these elements all tie together? The relationship between the dollar and gold is often inverse. When the dollar strengthens, gold prices typically fall because gold becomes more expensive in other currencies, reducing global demand. Conversely, a weaker dollar makes gold more affordable for foreign buyers, pushing up its price. Powell's speeches play a crucial role in this balancing act. His comments on inflation, interest rates, and economic outlook directly influence both the dollar and gold, and the ripple effects can be felt across global markets. Whether you're trading currencies, investing in gold, or just trying to understand the economy better, keeping an eye on Powell's speeches is essential. In summary, Fed Chair Jerome Powell's speeches are more than just words. They are powerful tools that can move the markets. By paying attention to what he says about interest rates, inflation, and the economy, you can better understand the potential impacts on the US dollar and gold prices. If you found this video helpful, make sure to give it a thumbs up, subscribe to the channel for more insights, and hit the bell icon so you never miss an update. Drop a comment below with your thoughts or any questions you might have. Thanks for watching, and I'll see you in the next video.